welcome out to the Halftime Reports. It is October 31st, 2019. Happy Halloween, everyone out there. So first of all, if you're watching our show, guys, let's start off. Let's get those likes up right off the bat. If you're not already, make sure you subscribe to our show. Click the link. It's right down in the corner. Man, past 24 hours have been a crazy news-filled, events-filled week. Banks reporting, GDP, news about the president, politics going nuts, crazy things all around the world. So first of all, I have to say welcome back to our great leader, Matt Justice. Matt, what on earth has gone on this week?
It's been an amazing last 24 hours. There's no doubt about that. We got a lot to talk about today. Apple's, Facebook's, Starbucks' earnings numbers. Trump came out and said they're close to signing or selecting the place where they're going to sign the agreement for phase one of the trade deal, which he indicated something today that I have not seen so far.
60% of the deal.
That is 60% of the deal. If that is 60% of the deal, what the hell have we been doing for the last 20 months? Them buying soybeans is 60% of the deal. Where's the intellectual property agreements? Where's the soft dollar costs? Where's the structural infrastructure trade agreement? So again, there's that. But then China came out and said that they're most likely going to sign it, but the other 40%, phase two, phase three, they're not even lukewarm on that at this point. And that was kind of coming into the headlines coming into the market open. And then when the market opened up today, you got the Chicago PMI numbers, and the Chicago PMI numbers, let me get you the exact read here, 43.2 versus 48.4. And for those of you who are not familiar with the PMI numbers, anything underneath 50 kind of designates contraction. Now, that could be a one-off type situation, just given the fact that the GM workers strike is going on during this time frame. But I think trade policy really is having a bigger impact here on the growth environment than a lot of people out there in the news media are indicating. So that's a little bit of a concern for me. And that's before we even getting to talk about the FOMC, the Bank of Canada, the Bank of Japan, and the Bank of Brazil. And when you talk about the FOMC cut the basis point 0.25% down to a current Fed fund rate of 1.5% versus 1.75%. That was not surprising at all. That was widely expected by the entire marketplace. What was interesting in this, though, Powell did change some of the accommodative language. He removed some of that language from that they were not going to be cutting at the next session that comes in December. That's the last one for this year. So I do expect us to be done for the year in lowering the interest rate. They announced what is called a pause. And a pause is one of three things. Either one, they're just going to skip a meeting, or two, they're going to skip all of 2020, or three, this is the indication of policies changing. I'm in the camp that this is a short-term pause that will lead into lower interest rates coming into 2020 as well. We did just lower 3 consecutive meetings. We did just announce quantitative easing and more repo action. So I do see this as just a pause in the short term. Also, Bank of Japan left their interest rate at -1%. Bank of Canada kept their interest rate at 1.75%. And the Bank of Brazil dropped their interest rate by 0.50 to 5% on the dot. And that's in the news. Now let's talk about the market here, guys.
There's quite a bit going on there, Matt.
I forgot one thing. China's PMI numbers again came out last night, and we saw China for the 6th consecutive month see contracting data from an industrial perspective. That was that as well. So I think it's since we broke out yesterday, it's shut up and buy, right? Plug your nose and buy.
You go first.
Yeah, you jump first. No, what's your read on all of this?
A little bit of whack-a-mole going on right now. Market poked its head up for 2 days, got smacked back down today. It's going to retest that support resistance zone. I think a lot of it will be contingent on tomorrow's jobs numbers and the rest of the unemployment report.
You got to call this a breakout, though, right?
Now. It's clearly a breakout.
You got to call this a breakout.
Two of the 3-4 major indices have broken out. So the S&P and the NASDAQ have broken out. Dow's right there. And then the Russell, we don't expect it to break out quite yet. But yeah, it's a breakout. It's a breakout.
Well, the Russell might not break out.
Yeah, might not break out. That's what I'm saying.
Ever. It
That's,
just might not.
Yeah, that's okay.
Definitely lagging. I also want to get your guys' take before we break some. Let's talk about Apple very quickly here. Apple's earnings report, one of the biggest in the world, no doubt about that. Apple came in at 3.03 on earnings per share. The expectation was 2.84. They came in at 64 billion versus the expectation of 62.6 billion. I read their guidance coming in neutral, but they did indicate that they're preparing for a pretty good holiday season here. Let's take a look at the Apple chart here. Noah, give me a quick read on Apple's chart.
All right, here we go. Look at that high wave hammer type candle.
That is a weird candle.
Well, that is up and down all over the board overnight.
Oh, yeah.
So, I mean, you got a little gap up, you got a shot down the moving average, you got to rally back up. Woo, that
A
is
long looking hammer, right?
Yeah, that is some crazy. And then overnight it shot up, to 250, 250. Then from the open, we see it shoot down. A lot of that. Look at how fast that happened. This is a 5-minute chart.
That was, I think that was in 1
that
minute.
down and up.
That was a
shot
tick.
back up. That's amazing. So I don't know.
I'm sure that was people making that decision.
Oh yeah, that was clearly people with really fast fingers. Oh yeah,
Matt, you don't trade within microseconds. I can get in and out in microseconds.
Edward scissors hands right there.
Yeah, like algorithm, whoom, right back up. Yeah, there you go.
Okay,
so that's fascinating.
The question I have for you and Gino specifically, Noah, is this: Apple coming into last year got beat up really, really, really good, and a lot of the first 6 months of this year, you had this appetite for revenue. You had this appetite for growth stocks. You saw the stocks like Shopify and these kind of unicorn type stocks do fairly good, kind of outperform the blue chips like Apple and Microsoft. But over the course of the last 6 months, Apple is just showing juggernaut status here, guys. In the last 2 months alone, Apple's up about 25%, added about $200 billion in market cap. This is a company that still has less than a 20 PE ratio. And I know we're at, from an economic perspective, we're not doing very good out there, but stocks don't have to do what the economy does, number one. Is this a buy after those earnings numbers and what you're seeing technically for Apple? And I'm not talking swing trade, day trade here, guys. I'm talking adding a position or adding more of a position to your portfolio.
Well, a smart man once said, you just buy Apple and you own it. Like, you don't necessarily have to trade it, right?
Mm-hmm.
At this price out here, it definitely feels like it's on the high end from the short-term perspective. But, they've got quite a few new products out, and they do sell a bunch of them. I think the Christmas item this year is going to be earbuds and the phones that go with them. So, I think they've got that revenue capability in the fourth quarter. I think they are one of the stocks that could lead the charge. So that being said,
to go on that really quickly, Noah, in their earnings report, like they're seeing 50% growth in their wearable type products.
Mm-hmm.
And that is astounding when you're talking about how big Apple is. To be able to do that in those wearable products is absolutely astonishing. I'm seeing a trigger perhaps above 250 here. Talk me out of it.
No.
Okay. Done. Done. Gino, what's your take on Apple?
Same. I mean, there's a lot of news around Apple. What I do see is when everything's going good for a company, they don't need to change nothing. But now they're coming out with this pay plan, pay to own payment plan, reducing prices on phones. They're starting to get inventive. Before you know it, they're going to be mailing you coupons. So I think that they're trying to find a way to spur growth, and they're good at that. So yeah, there's a trigger above 250, but when I look at the fundamentals of all the things they're trying to do to spur more interest in their phones, and they're getting inventive on their sales and marketing. I mean, they've never had to do these things. Why would they start now? And if these are great ideas, they didn't need them in the past. So yes, they're thinking of ways to spur growth. That's good. I like the ideas they're coming up with. They're a great company. They are one of the biggest in the world. What is their market cap again?
It's $1.1 trillion at this point.
That you have to put Apple, ExxonMobil, Microsoft in your daily routine because they're market movers. Now, with that said, with the big fluctuation and that downtick in today, market held up. The market held up. They are really market mover. I expected a bigger move. The market maker move was pricing 11 points on the open of the earnings, and they didn't get it. They are shy of it.
Short strangles won the day today.
Yeah, it sure did. Sure did. And yesterday at the lounge, if you guys missed it, we threw on a debit condor. We wanted it to move 12 points to go through our debit condor, but it did not. It was outside the market maker. It was right at the market maker move, but we sold naked puts at the 170, 175 level to hedge that off. Thank God. The volatility crushing those options paid for that small risk. And we're sitting.
That's why you get into the lounge, guys. Every now and then there's those gems that Gino or Mark or Noah does, and just absolutely fantastic. I want to ask you guys a question here, and Blake says it in the chat. Let's project 10 years out from here. Okay. And you had to pick one. Do you pick Apple or do you pick Microsoft? Microsoft being the consistent, just turning it over, just very consistent business model. One of the most consistent trends in the market over the course of the last 10 years, mind you. Apple has short-term volatility. One thing I do like about what Apple's doing is they're diversifying from the percentage of all of their revenues from the iPhone. And that's been one of my biggest concerns if we do go through a recession and Apple's, sees a significant decrease in iPhone sales. But if they can make up some of that loss in revenue into other areas of their business, like the Apple Store, cheap subscription revenue type thing, like cloud-based systems, like, the wearables that they're doing, they're really doing a good job, in my opinion, in offsetting that. And we're talking about a company that's up, 60% year to date, just doing absolutely ridiculous things here. And you're also talking, it still has a P ratio in the teens. Their revenue is still catching up to their price. And so for me, well, I'm gonna wait. No, let's go with you first. Microsoft or Apple?
I'm wearing an Apple Watch. I got an Apple phone. I've got Apple products. I want to buy the new Apple machine desktop. I'm gonna go with Microsoft.
You're an Apple consumer. Yeah.
And I'm gonna go.
But you're an investor. Microsoft. I like it. What would give me one reason why Microsoft over Apple?
Cost base, decent dividend. They both have dividends, but just cost base. I also like how they're moving into the AWS cloud. Like, I think they're diversifying their portfolio again more. Product wise, I don't know. I think it's kind of a question for me. I think of bang for the buck on the valuation.
Yeah. I'd like their breakout after earnings earlier this week.
Well, and there's probably one other big factor on Microsoft. They're doing their buyback. They've got that big buyback they're working out. So,
that's like literally, I read this the other day, guys, with Apple. Apple has repurchased over 2 billion of their own shares in the last 5 years. They have the lowest float on the marketplace since they had in the 1990s. And with that, Gino, where are you, Microsoft or Apple?
With that, it makes me like Apple because of the demand. They're trying to build up the demand. What I don't like about Apple is 42.8% of their business market cap is based on their iPhone. They're a phone company. Then their app store and other services is 21.6%. But you got to look at, everybody's like, Steve Jobs is gone. They're not innovative. Well, since then we have the AirPods, right? And they are considered the top 10 gifts right now going into Christmas. And it's the top 10 thing I'm finding laying around in the gym, on the beach, and just people losing them. So when they invent a way to keep them from falling out of your ear, they're going to give you even better. And
tape.
Yeah, tape. Just put tape around your head, right?
Yeah.
At some point, we're just going to glue beads to our heads.
They're just going to surgically I've seen that Black Mirror.
Yeah. So what Apple also is it's got a fan base, unlike Microsoft, a very dedicated fan base where they really hit the middle schoolers. I mean, if your kid doesn't have an iPhone, even South Park made fun of it. If you're
they're a bigger marketer to children than Jewel is.
Just like Jewel, I was just gonna say that.
Yeah.
And it's more addictive and more detrimental to your health.
Yeah. So I mean, it's an image thing, and a lot of Apple is an image. People are like, "Oh, I got to be Apple." I've like Noah said, "I've got an Apple this and that," but they kind of make it that way because if you have the
who do you think has better brand loyalty, Apple or Disney?
Oh, people grow out of Disney.
I don't know if they do.
No, I think I would go Disney on that. Your hardcore
Well,
Disney fans are hardcore.
Does
Disney.
Disney have a government tracker that can track your every move and report back
And
the
real
data?
quickly, guess
You
what?
wear
No,
willingly?
not yet.
Okay.
Guess what
All
Disney
right.
Not
does?
yet. Not yet.
Disney does what, Matt? They do the jewel technique. They get you when you're a kid, and they're focused in now on boys with the Marvel and all the comics and the superheroes. Used to be princesses and all that stuff. Now they're really getting into the comic books, which are actually hitting adults. The comic book thing, the Star Wars. I mean, California Adventures. They got all the comic books, Spider-Man, all that.
Oh,
stuff.
I think Disney has the #1 brand loyalty in the world.
And
I think
you know what?
I do think Apple's a close second though.
Yes, but here's the thing: is it is an image thing that gets you when you're a kid, just like the jewel technique, the tobacco, but also it drives away people like me because I'm like, you know what? I trade with the PC because the Apple stuff isn't just. I don't want to be stuck in that ecosystem they got where, oh, I have to have their TV to have. Like, in fact, we got my Wi-Fi iWatch. I didn't know it didn't work with her Android phone. So guess what? They said, you got to buy the iPhone. I said, nope.
Oh, Apple's notorious for that though.
I said,
well,
nope. We're getting
different plugs, different
Samsung
things.
watch. So
But
we
I
had
want
to
to
do
get Noah's
Their
take
new
on.
computer stand. They have a new computer and monitor, like the desktop's like 10 grand. The stand alone for the monitor is like $1,200. The
Yeah.
monitor, yeah, I mean, it's like out, like if you wanted to go buy their brand new desktop, if you were a graphic designer, you're into them 15 to 20 grand.
But this
Yeah.
is a true statement. Their hardware is the best. Their software, not good. You can ask
Yeah.
any software programmer. Ecosystem does not compatible, and that's a problem with it.
I'm willing to bet though there is a percentage of the demographic out there that really likes the fact that Apple's products are interconnected with one another, and it makes their life seem more
Easy.
interconnected as well and easier, that they don't have to learn multiple different versions of this and that they
That's
can
it.
put on. Yeah, they can put on their Beats and it automatically connects to their iPhone.
Everything's
think-
one, and it's secure.
Yeah.
They got a
Yeah.
good secure, which is very important to cybersecurity. Until you start to find out, no, it's not secure. I've seen a lot of people with Apple computer viruses, and they don't know what to do. But here's the thing: we went the Apple route, Matt, and it wasn't compatible with all my stuff I do, my different businesses, with all my softwares and other affiliates. They're like, "Oh shoot, I need you to transfer it." And then guess what? I sat 3 times at the Apple store. Not a fun experience for me. I did not like being there. I felt like I was at the DMV, or a DMV dressed up like a Star
Is there
Wars.
any way Gino's going to say I'm picking Apple for the next 10 years?
No, I'll trade Apple. I'll make money on it. But
But you'll take Microsoft?
I don't mind. I don't like going in the what is that, Star Trek themed store, iStore, Apple store, when I'm waiting in line, and then they tell me my screen is cracked. I need to spend another $180. And I'm like, you know what? I could get a brand new non-Apple product for less than that. I don't need the fad. I don't need the, oh, I'm wearing Apple bling bling. I want it just to work. So I'm not a fan. Not a fan. Like their products, but I'm PC Microsoft all the way.
So you're going Microsoft. So we
I'm
got 2 from
all the way.
Microsoft.
As an investor,
I would take Microsoft as well.
I
think
say,
Apple-
Microsoft also just got the multi-billion-dollar Jedi contract through the Pentagon for
Which basically what we're all saying is that Microsoft will be the first U.S. company at $2 trillion.
I think
I mean, that's basically what we're saying here, guys.
yeah.
So, I mean, you're talking about the 2 behemoths of the world, and I know Amazon's kind of that third and Google's that fourth, but there does seem like there's a race here to that next plateau. And I would just say that take Microsoft. I like the consistency of it. I like the business to business better of it. I think Microsoft has a better, more stability from a technical perspective as well. So I think it's 4 for 4. Cody, you taking Microsoft as well?
Yeah, I'll take Microsoft as well.
And I asked
All right.
people, Matt, you got to take it a step further. Would you take the Microsoft Google route or the Apple Safari route? The Microsoft Google Maps or the Safari Maps? It's like,
Google Maps.
And it's like,
For
come on,
me.
Apple, get on the 5G thing already. What's going on, man?
Oh, they're going to wait for somebody else to develop it. Then they're going to buy it with their $280 billion in cash
Yeah.
reserves off some island,
They're gonna have to go
off
right to
Iceland or
60.
something like that. But that's another fundamental reason why Apple, no company in the world has more cash reserves on hand than
Huge cash.
Apple does to withstand any type of economic crisis here. So it's going to be interesting to watch this battle of Microsoft. It reminds me of, 12 years ago when we were talking ExxonMobil and Apple competing for, those number one status type companies. I want to move on to Facebook here, guys. Facebook reported earnings very quickly. Interesting, before I give the numbers here, Twitter and Jack Dorsey, I want to get you guys' take on this. Jack Dorsey through Twitter yesterday banned all political ads. Mark Zuckerberg last week on the Hill basically stated that they're not in the business of regulating political ads and misleading ads and lies and all that jazz. It was interesting. It was a shot. This to me is a fascinating thing to watch between Jack and Zuck kind of play out here. Facebook's numbers, though, came in pretty good here, guys. Came in at 2.12 earnings per share versus the expectation 1.91. Revenue came in at slightly above the expectation of 17.7 billion versus the expectation of 17.3 billion. Revenue came in year over year increase of 28.6%, and they have like 1.68 billion daily users right now. Let's take a look at Facebook. Noah, give me your technical read on the Facebook price action as we've seen it come out of this earnings from last night.
Well, after earnings, we had a nice little gap up and some profit taking afterwards, bringing it right back down, filling the gap. But it definitely gave us that gap up. So that clears that resistance zone. So I would break that down to an intraday chart and kind of watch that. Let me back it out to 15 minutes or so. Watch this old support resistance zone. This 191, 192 zone in here is a big zone. It's retesting that after the breakout. So I think that's the big key right there, is that 190 zone. Watch that. Watch to see if new support forms, because again, nice numbers they beat. So
if that closes above 192, you're going to still call that a breakout, but you're going to be hesitant. Correct?
I'm just hesitant. I'd probably take it a trigger intraday. I'd want to see it take out intraday resistance pivots, probably
195,
95-ish. Yep, that would be a good trigger.
I think that's the trigger above 195. That intraday pivot at that 195 level. I think that's if you're looking to take this on Facebook, I think you got to look at it above 195. Wow. But maintaining 192 on the intraday is also important.
Yeah, and I honestly think that the Twitter move, coupled with their revenue, it's like they don't like money. It's great that they banned political.
Well, it's almost like they should never went public if they're going to have that stance.
Well, yeah, that, and I mean that super PAC money's that's big money. So
it is big revenue. I think both Facebook, Twitter make far more money on political advertisements than they want to or care to admit, because they just don't want to have the regulatory conversations. But Twitter, I applaud Jack for doing that, but there's some drawbacks to that too, Noah. Right.
Well, yeah, there's certainly drawbacks to it. And again, it's not like there's not going to be political fodder on Twitter. They just won't they just won't be able to pay for it, and they won't be able to
they can't
generate revenue off of it.
They won't be able to use
well, how are they going to even determine what a political ad is? If I go out and put an ad out there today, just me as an individual saying I want to support XYZ person and this is why, right? Would they not allow that as just from an individual?
They won't allow you to pay.
They won't allow me to pay them money.
Yeah.
That's an interesting business
all
decision.
Of the politics and none of the money. That's just what I'm saying.
That's all that's a great business.
Honestly, both sides of both decisions, I'm okay with, because it's either you don't regulate and try to add tidbit rules and all these things and make it way complicated. So you either just don't regulate it, or you just don't allow it entirely.
Either stay out of it one way or the other. Stay out of the regulations. Stay out. I agree. But Facebook and Twitter should not be allowed to determine what is truth and what is not truth.
Exactly. That's exactly the point. So they're either staying out of it or unregulating it. And I'm okay with both decisions.
It'll be interesting to see what Facebook does.
Great arbiters of truth. And I want to put some air quotes on that.
Yeah, I agree. I agree 100% with that. Twitter just, they had a really bad earnings report, but yeah, that gives me not a lot of confidence. Although I do appreciate them going to the full way instead of just saying, we're going to allow it, but we're going to determine what is true and what is not true. I do agree with what Cody just said on that. Gino, on Facebook here, what's your read on Facebook post earnings?
Well, technically, this gap up and the sell off to test that support, I want to see how this closes today. If it closes near the high of the candle, I'm going to have to put a trigger above it. kind of like the Apple.
Mhm.
It kind of looks like the markets. This is inverted head and shoulders. If no one wants to trace that out, this is an interesting. And by the way, this is great. By the way, this is a great day trading gap play when it fills the gap. And you know, all the day traders are going to be stopped out on their short here pretty soon. So that might make this go up. Look at the volume on that going into this yesterday and today. The trigger above this, Matt, takes us to 208. So I'm looking at a trigger on a swing breakout above this. And 200 is a very, very psychological number. Well, look at the high intraday.
Well, yeah, I mean, the intraday from last night hit 200.
Yeah. If it breaks that, that's a huge psychological trigger. Look at exactly 200. What's the odds of that?
Pretty good. Lots of
There's algorithms.
200.
Yeah, there's algorithms.
I mean, it didn't go $2, 200 and a penny.
No, there were algorithms programmed to sell at 200.
So
okay, I want to ask you guys a question though.
Where's the trigger above that? Not 200.
I think the trigger's above 195 personally.
Oh, okay.
I think you trigger above intraday at 195 because if you wait till 198, I think you're starting to get into some negative return versus risk ratios. So I do believe if you're going to take it, it's got to stay above 190, 192 on the intraday pullback here. And then you pull it above 195 from a technical perspective with the stop loss underneath, 190. So you're triggering above 195, stop loss right around 190-ish, targeting obviously 200 at first level target and 205 at second level target.
I like that plan. Is that intraday today if it does it?
Yep.
Yeah. Oh, yeah.
Yeah. So if you guys want to practice that one, that's a great intraday aggressive trade. For a swing trader, it would be above 200.
I agree with that.
But I definitely like that plan. Look at the volume.
This would be a day trade with an expectation that you could turn it into a 3-4 day trade.
Yeah.
Right.
Yeah, that's that.
Okay. I want to give you guys
Matt. I like your triggers. I'll do a partial position that you said just above 195.
Like scale in.
Yep. And then above 200, I'd add to it.
Yeah.
That is, and I might add to it with calls. So I do like that setup, guys. There's a lot of ways to play this. And I do have a day trader friend that does play this all the time. And he's already out from this morning's move.
Yeah.
So there you got it. Facebook.
Well, I know Slavic. I know he nailed this one. I know.
That's him.
Yeah. He was, Slavic had a good first 2 hours of trading when he's coming into our Slack channel bragging.
Yeah.
You're like, yeah, Slavic, you're an assassin. You did it. I like it. Hey, I'm going to ask you a question. Okay. Take the breakout on Facebook off that inverted cup and handle. Okay. Right. Take the breakout of 250 on Apple. Take the breakout. And what's the number on Microsoft's breakout? Will you pull up Microsoft real quick?
Yeah, if I can type.
Okay. And that'd be 146-ish. Off like a little bit of a high base type thing. Yep. Or let me give you a fourth one. Take a look at CSX console.
Man, I have got to learn how to type this morning.
Okay.
CSX.
Now, I love the run up and the hold at that resistance right around $73. I love the pullback here to $70, giving a fresh legs running into that 73 breakout. So you can take the 73 breakout on CSX. You can take the 195 type trade breaking out of 190 on Facebook. You can take the Microsoft breakout or the Apple breakout. Which one?
I'm going to go with Microsoft or Apple. Because clean air. So the difference between, if Facebook breaks out, you got resistance zones.
Right.
Whereas Microsoft breaks out, you got
there's nothing.
You got clean air.
Nothing.
Apple.
Same on Apple.
Same with Apple. So one of those.
Same on Apple. I'll tell you, I do kind of like that CSX trade though.
No, it's not a bad trade. Like the minute I popped it open,
it's not ready. It's not ready. But
and if you clear, it's got that gap area, which I think creates a little vacuum for it to trade in.
Well, also you're reclaiming the 200-day moving average at that point as well.
Yeah, absolutely.
Right. You're at that point, you're above all. I just think CSX needs to be on a watch list with the anticipation that 73 breakout could run into that 76, 77 area. And that'd be a decent little swing trade. But I personally would take Apple or Microsoft myself.
Agreed.
All right, last earnings I want to talk about. Starbucks, very quickly. Noah, just give me your quick read on it. Starbucks came in at 0.7 on the EPS numbers. Revenue 6.7 billion versus 6.6. Guidance was reaffirmed. Gapped out, sold back off. I think a lot of this on Facebook and on Starbucks is more market related than individual company related. Both were gapping. Both took profit on the cash open after the Chicago PMI numbers here. Is there anything to see here, Noah, on this one?
Well, I actually let a debit spread ride on this bad boy, so I kind of like the downward action myself. So I had to, better put debits on that. I think that the gap up and the energy coming down, a little uptick in volume. I bet we come down and retest that 200.
Yeah, it kind of feels that way, doesn't it?
Yep, it does.
Well, before we move on, I actually want to point out a few more companies that are going to have earnings, some after the bell and some before the bell tomorrow, some big companies. We have Alibaba's got earnings. We have ExxonMobil.
Baba action.
It's a little
Like the
Baba
Baba
action. I
potential
mean,
breakout there.
this thing's been consolidating for a long time. I mean, it had that false breakout, a month ago? I got
that got
smacked
every
in the face
one of us stopped out on.
Yep, I got smacked in the face by that one.
You guys, I managed that like a champ, by the way. I got stuck in a breakout just like you, but I walked away smelling like a rose.
We have ExxonMobil, Chevron, both of those.
I think you need to go confess to the great Father Stoccaducci on that one.
Oh yeah, no doubt.
There's a little bit of pride there, Noah. Energy's been getting beaten up really bad lately, and I mean, Marathon Oil actually had earnings before the bell this morning, and that kind of just shows you what the energy sector's been doing. They've been seriously getting.
Yeah, it's the worst performing sector.
And I mean, with earnings coming out, and I have to ask, are you guys watching or even anticipating the Saudi Aramco IPO? Because apparently
I don't care about IPOs.
Well, I know, but it's Saudi Aramco. They might be IPOing at one.
They might be the next beyond.
Yeah, and they're the next Baba who's going to sell off on the IPO, and then everybody's going to get kicked out. And there's going to be a wonderful buy at some point.
At some point, and that's more at the 3-month mark is really where I'm looking to possibly. Because I mean, if they do enter at a stupid high price and they drop, then I will gladly buy them.
Whatever the price is, it's too high.
Whatever it is, doesn't matter.
Whatever the price is, it does not matter. It does not matter to me. Whatever the price is, they could say it's a $1.5 trillion company with anticipation of it going to a $2 trillion company, and I'd say, wait.
Yeah, I'm not going to disagree with you there.
But don't get me wrong. We will be talking about it the entire day it happened, obviously. I do want to get a couple other quick peeks at a couple things. Number one, let's take a quick peek at the dollar here, Cody. I want to get your take on the dollar. Obviously, we're starting to see some rotation coming out of the dollar. You have a pivot low with the retest of that 200-day moving average and a trend line right underneath that. If it clips at 97, Mark, 96 is a stone throw here. Cody, what's your read?
And that was actually what we were talking this morning. So I've been saying how it's been difficult to measure the dollar, and we've been neutral the past couple of weeks on it. And the reason why is because even though we had that turnover and that big sell-off, it's still maintained that long weekly uptrend. And right now that's still being maintained. The 200's there. Right below that is that channel. But what you and I were talking about this morning is this is feeling more and more like a reversal pattern. This looks like it could possibly turn over. And I think that mark, that what you just said at 97, I think that really is the line in the sand that needs to hold. If it breaks 97, we can no longer be neutral or even bullish on the dollar. We have to go bearish on the dollar.
I would agree.
It's hard to even say that because I mean, I love the dollar. It's beautiful to use the dollar to make money.
I want more of them. Yeah,
exactly. I love using.
Listen, it's still the best of the bunch of bad currencies, but technically things do cycle.
It's now even with the CAD and the US dollar now have the exact same interest rate. So it's kind of tied for the least ugly of the bunch right now. But I mean, Canada.
Well, I'll still take the military might of the U.S. military, though.
Well, there's a reason that Canada doesn't have a big military.
Yeah, there's that reason.
Because the U.S. has such a big military.
You guys are listen, Greg Holmes and those Canadian friends of ours, they're just way too nice, way too kind, way too peaceful.
They are. But we love them. America's hat. We love them.
Let's take a quick peek at crude oil. Gino, what's your insider saying, buddy?
I'm not getting any insider on crude oil lately. It is stuck in a range. We do have support just above 50. A nice solid support there, and possibly a little bit of a head and shoulder going there. I'm going to look to see if it holds that support again, if it starts to rally up. I'm back into the naked puts on that. I'll tell you, range bound. Look at that. It's been range bound for 6 months now. And with all the political stuff going on, it's just holding steady. The dollar,
I just keep feeling bull put spreads on crude or.
Well, and I saw some inventory numbers that popped up, so I think they were expecting, they got a little surprise on their oversupply.
Yeah, and all the action, guys, is in the natural gas right now when it comes to commodities.
Oh, and that was my next move here in natural gas. We're starting to see some price appreciation.
Yeah.
We've talked about this a lot over the course of the last month. The seasonality of natural gas is pretty strong coming into to November, the back half of November, December. Sometimes they'll start a little sooner. What's your guys' take here? Natural gas reclaimed its resistance. Is well above all of its moving averages at this point. I got a bullish rating, even though it's slightly overextended here. I'm seeing rotation. Natural gas is starting to pick up volatility. What do you guys read here?
I think this is so similar to what we saw last year, seasonally, time of year, wildfires, the whole 9 yards, gapped up, and then just took off. Here we are, November, gapped up. We got wildfires. We got all this. I think it'd be realistic. So yesterday we were talking about, debit spreads out here, expecting it to maybe pop up towards 3. You might get lucky and see it pop up to 3, 3.5. I mean, you can't really say, I think it's going to go parabolic and shoot all the way up to 4.
Last year was a little radical from that type of price movement. I think 3.5 is doable here in this seasonality.
Yeah. Well, it's just, the season, it's just uncanny, the similarities between the charts. Like it ran up, it retraced, and then popped. It ran up, it retraced a little bit deeper, and it popped. And again, I think there's that potential. If it can clear that resistance zone, you might see a run to 3, no problem. 3.5 is not a hard crash.
What you guys are saying is don't put millions and millions of hedge fund
naked calls.
Naked calls.
Naked calls. No.
Not that many.
No, let's not do that.
Don't blow up the hedge fund.
Let's go against all seasonality, all probability analysis, and let's put our entire account over leveraged on naked calls on natural. I still think that's one of the dumbest things I've ever seen in my trading adult life. Oh, it's the dumbest thing you'd ever imagine. And they had $200 million in that trade. Just wow. Just absolutely insane here. Keep an eye on natural gas seasonality here, guys. I do think in the short term it's overextended. Wait for a high base, maybe even a little bit of retracement. Retest that 200-day moving average right there at about 2.5. We'll see how that goes here. But seasonality is starting to play out. It is really, really amazing to see the same headlines from last year, Noah, and just playing out to an identical type situation. Gap out first coming into November, high basing like we did, and then it just made that parabolic move from 3.5 all the way to $5, which is a massive move. So keep an eye on natural gas. Last, I want to take a look at gold/GC here, getting some action on gold as the dollar is starting to fade here. What's your read on gold? Is it a buy here, guys?
It's so hard not to like this because it is.
I just think you have cheap risk, Noah.
Well, cheap risk plus, look at that consolidation it's breaking out of. And that, again, I can't save my life here, but it's breaking that pinch in consolidation. You got your cup and handle. I think there's potential for a gold run here, especially with the dollar. And again, they pause, but we know they're going to lower interest rates again. So I think.
I think they'll lower it in the first quarter of 2020.
Yeah. Yep. So all that glitters is gold, and even if you were wrong, you still own gold.
Yeah, to me, it's just cheap risk. You're starting to see 15 really level out. You're starting to see clear levels of support. Take a quick look at that weekly chart. You were reading my head there.
Flag. Yeah, textbook bull flag. If you were to look up a bull flag pattern in a textbook,
that would be it.
Yep. So
no, definitely keep an eye on gold out there as well, guys. We're coming to the end of the Tackle Trading Halftime Report. This is my first report in a week. I've missed you guys. It's good to be back with everybody. Looking forward to being here tomorrow as well as we get ready for the Scouting Report meeting and Friday Fun Day. I'm sure Breakout Frank's going to join us. Maybe Gino and Noah will pop in as well. Last thoughts, Noah?
One, happy Halloween. Stay safe. Don't take candy from strangers, except for tonight. Go take all the candy you can from strangers.
Are you going to dress up as Great Father Stockaducci on Halloween?
Well,
Are you going to be passing? Are you going to be passing candy to children?
they
your
frown
priest
upon that.
outfit?
Yeah, people get nervous with priests around children, so probably not. So pardon me.
It's just too easy. It's just too easy.
Yeah, so no.
I love it. I am personally doing the trick or treating, walking my daughter around, doing that whole thing. She dressed up as Harley. Who's it? It's the girl from Harley Quinn. Thank you. But it was not. It was a toned down version. It was toned down. Gino,
it needs to get toned down.
It was a very, very, very toned down version. Gino, last thoughts.
Yeah, guys, I am looking for the unemployment numbers tomorrow morning to see what the market does with that. First Friday of the month. First Friday of the month. Every month we get non-farm payroll, and that will be coming out tomorrow, right, Noah?
Yeah, it is coming out tomorrow.
First Friday of every month, right?
Yeah, so I want to see what that does. If the market holds at 3030 level on the S&P is being tested again today. I want to see where we close today. I'd like to see a close higher above tomorrow, and looking forward to a rally into next week. But what I'm looking forward to today, guys, or actually tomorrow, guys, is we're going to get together, the team at Tackle. We're going to get together, about a half dozen of us, and we're going to break down every little bit of this market. We're going to put out a great watch list for the upcoming week. And we're going to have a better outlook on the market based on tomorrow's close. That way, next week, we could be more prepared, get all this earnings, driver news behind us, and focus in and get a beat on next week. So I'm saving money, Matt, and saving some ammo for next week. Also, Matt, do you want to talk about the Traders Expo?
Ooh, yeah, go ahead. This is your show, buddy. You're giving a speech down there.
The whole team's gonna be in Vegas, and I believe it's Bally's, Paris, November 7th, 8th, 9th. Traders Expo. Anybody wants to come out and meet us, would love to see you there. Stop by our booth.
Oh, the entire team's going to be down there too.
We're gonna have a lot of fun.
Except me.
Might need to do the halftime report from the expo.
Yeah,
that'd be fun. Actually,
we actually are. We got the okay to do that as long. Yeah, so we got the okay to do that. So it'd be funner if you guys were there and just
Tackle's first expo too.
Yeah, and we're gonna be
not our last.
Just
our first.
Got a lot of good giveaways there.
I like it. So the Tackle Expo, or the Traders Expo that Tackle is going to be at next week down in Vegas. And Marie, I'll share the picture with the team here. You know, Tim, myself, Keith King, Emily Maruri, and Jake Lamore, we had the opportunity to go hang out with great folks over there at CNBC and really got to sit behind and see how that sauce is made from the halftime report and some of those other great shows, Fast Money as well. We actually watched a production of Fast Money, and I'll tell you, it gave me like, to see all the work behind the scenes. Sometimes, it's very easy to take shots at somebody that's public, right? It's easy to take shots at us sometimes because we're public. It's easy to take shots at CNBC because they're in the public persona. But I was extremely impressed by the business side of it. I was extremely impressed by the production, and it was just an absolutely fantastic experience. And we hope that, in the future, maybe you'll see one of our coaches like a Gino Poor or Noah Davidson or a Keith King, on one of their shows representing Tackle and teaching people and getting more visibility out there. So it was really, really, really cool.
All right. Well, I'm gonna say one thing on this Halloween. There's been a lot of talk about a particular dog on the internet, but I mean, that's the bestest boy right there.
Yeah.
Mordecai.
Yeah.
What's that?
Let's see the costume. Come here, boy. Come here, boy. What do you got him dressed up as?
He's an alligator.
He's an alligator. That's awesome.
I didn't think a Texas A&M fan would dress their dog up like a gator.
Like a Florida gator.
Yeah. Huh.
Hey,
Cody's going to go burn the outfit now.
You know what made him become a gator this year? Because I walked into the local PetSmart and everything was already 80% off. So I spent like $10 on the costume.
Okay. I got to share my dog. Hang on a sec. Let me share my dog. Ready?
Do I have to go get one of my 6 dogs?
You might. Plus, Oh, and I almost forgot. I still need to judge the pumpkins. We had a handful of people turning their pumpkin carvings.
Oh
We had a
yeah,
couple
that's
good
today.
ones.
Bring us.
We had some. Yeah, so we had
Let's
some
look at 'em.
logos.
You got to
I
stop
don't know if I
sharing
brought
them.
them all. Do you have them all?
We got to go find them.
That would take us a while to dig up. We'll do it in the clubhouse.
Do
All
the
right.
clubhouse.
All right. Do it in the clubhouse. Do it in the clubhouse.
You got to stop sharing, Cody. I'll show you a picture.
Noah's got the screen.
Oh, I will stop sharing. There we go.
Okay, here we go. So somebody's sharing still.
I'm working on it. Hang on.
Technology's hard.
It is hard, especially when you're. It won't move for me. There we go. Hold on.
Oh, because you have an Apple?
Yeah, pretty much. I just had to get the button was hidden. So there we go.
There we go. Tell me if you can see that little guy right there.
Oh, that's
Yeah.
that is fantastic.
Yeah, he's busted, man.
Oh, that is fantastic.
Yeah, he looks guilty, right?
Oh, flat out guilty. He just did got into something. Oh yeah. He's giving you the puppy dog stare. Like, I am sorry. I just took a poo on the carpet.
Well,
Thing.
I'll tell you what.
Got into the garbage.
Yeah, he's wearing that outfit on purpose, Matt. He's been a bad dog. Okay, don't let
Get into the garbage.
His cuteness. Don't let it fool you. Don't let it fool you. He's a bad dog. All right, can't be trusted.
Oh, goodness gracious.
All right, guys.
Dog,
With
though.
that, guys, if you liked our show, you enjoy it, make sure you give us a like, subscribe at the bottom. And if you actually want to see what our members get behind the paywall over there at Tackle Trading, you can get a 15-day free trial by clicking the link down in the description. Or you could always email Mark at team@tackletrading.com and he'll get you set up. With that, guys, we will see you tomorrow. We're out.